Hello friends, let's begin with a small story. There was a man who was disciplined in everything. Work on time, care for his family, balance in relationships, and every decision made thoughtfully. He thought the market would also respond the same way. I'll read the right books, learn the techniques, understand the charts, and the money will come. He changed indicators, changed time frames, changed strategies, but every time something went wrong, a small loss, then a bigger one, then the hope that next time he would get it right. One day he saw that very little was left in his account. He broke down and began to think that maybe he was not made for trading. This story could be the story of many of you. This is the place where most traders get stuck. Mark Douglas explained the root of this problem and showed that the real battle is not on the charts but in our minds. Today we will talk about this book and make it practical enough that you can start changing from tomorrow. The nature of the market. First, let us understand the true nature of the market. The market is uncertain. Every moment that happens is new. The past may have given signals, but the next move is not guaranteed. Success lies in accepting this uncertainty and working with it. Winning traders don't claim to know the future. They don't expect a specific outcome. They work with probabilities. Every trade is a possibility, and a good strategy means that in the long run, your gains will outweigh your small losses. The real game is to treat every trade as just one sample, not as the ultimate answer. Mindset, the biggest weapon or obstacle. Your mindset is either your biggest weapon or your biggest obstacle. Most people focus so much on technique that they neglect psychology. When you change your system just because one trade went wrong, you are letting your mind's noise overpower your system. That's why the first step is to adopt probabilistic thinking. Probabilistic thinking means seeing every event separately and knowing that no outcome guarantees the future. It also means defining your losses in advance and accepting them. Risk and position sizing. Before taking any trade, be clear about how much loss you are willing to bear. That number is the final line of your decision. If you move your stop out of fear of losing, you are breaking your rules. And breaking rules, in the long run, will be the most expensive habit. Make a rule and follow it. Along with this, deciding position size is also very important. The way to decide position size is to ensure that the maximum loss on that trade is only a small part of your total capital. This way, risk remains under control and emotions don't dominate. 5 fundamental truths from the book. The book highlights 5 core truths every trader must understand. You don't know what the next move will be. Anything can happen at any time. Every moment is unique. Decisions should be based on sample size, not on one event. Define risk in advance. Accepting these truths will change your perspective. You will move with awareness of risk and avoid reacting emotionally every time. Beliefs that influence us. Now let's talk about beliefs that unconsciously influence our decisions. Many times we hold on to beliefs formed from small life experiences. For example, some people think making money is wrong, or that big success is not in their destiny. These beliefs quietly influence your choices. When you face repeated small losses, your mind connects those experiences and draws a conclusion, making you lose focus. The best solution for this is keeping a trading journal. Write down with every trade what you were feeling, why you took that trade, what signals you saw, and what the result was. Over time, this record will show you patterns you couldn't see before. The Powerful 20. Trade Exercise. One very powerful exercise described in the book is the 20 trade test, or, quote, casino exercise. Its purpose is to test yourself over a long sample and embed probabilistic thinking into your brain. The method is simple. Make a clear rule. Define entry, exit, and stop levels in advance. Apply the same rule consistently for at least 20 trades without changing it. This will do 2 things. First, you will see the real performance of your strategy. Second, you will identify your mental resistance and learn if you can actually stick to rules. Accepting risk. Accepting risk is another crucial aspect. Many traders avoid it. They think if they set a stop, losses can be prevented. But the market does not care about your feelings. Accepting risk and sizing your position accordingly is the only real protection. Accepting risk doesn't mean you like losing. It means you acknowledge that each trade carries potential loss, and that loss is within your planned capital. Profit-taking. Many traders make emotional decisions in profit-taking as well. If you exit too early, you miss out on big moves. If you hold too long, you risk reversal. A practical method is scaling out. Divide your position, take some profit early, and let the rest run. This gives you satisfaction and also keeps you in for potential big gains. Mental routine before each trade. Before every trade, adopt a short mental routine. Take a few deep breaths, bring your focus to the present, and ask yourself, is this trade according to my rules? If yes, enter without hesitation. If not, stop and reassess. This small routine helps you avoid short-term emotional impulses and brings consistency to your decisions. Journaling and self-review. Take journaling seriously. Write down a brief detail of every trade. What triggered it, what signals were present, what your mental state was, what rules you applied, what the result was, and what you learned. Over time, this journal will become your most valuable document, showing you your patterns again and again. What to do when you're losing. When you're on a losing streak, first reduce your position size. Many traders try to reverse losses with bigger trades, but that only worsens the damage. Smaller positions lower your risk and help you make clearer decisions. Second, review your trading rules. Are you actually following them? Third, take a pause, read your journal, and experiment with small tweaks. Test results with minimal changes and learn. Handling negative beliefs. If you're struggling with negative beliefs, identify and label them. Psychological techniques can be simple. Write the belief down and then run small, opposite experiments. For example, if you think you'll always lose, then trade with a small size, limited risk strategy consistently for 20 to 50 trades. Slowly, your mind will start revising its conclusions based on new evidence. Discipline and routine. Maintaining discipline and routine is the hardest but most important work. Discipline often breaks when we are physically tired or emotionally unstable. That's why you must include rest and mental breaks in your daily routine. Short breaks, 5 minutes of meditation or breathing exercises can improve your decision-making ability. Rules and sample size. Keep written rules for entry and exit. Only enter trades when all conditions are met. If you are afraid of using a stop loss, realize that you are gambling emotionally. Stops must be aligned with your strategy. Removing them can prove very costly. Also, remember the importance of sample size. 1 or 2 trades cannot prove or disprove your system. Take at least 20 to 50 trades as a sample. Patience is key. Judge based on long-term outcomes. Monthly review. To build consistency, adopt a monthly review routine. At the end of each month, summarize all your trades. Which strategies worked? Which mistakes repeated? What mental states led to errors? This review helps you see patterns affecting performance and shows if your strategy truly has an edge. Practical rules to start immediately. Here are practical rules you can apply from tomorrow. Write down risk for every trade in advance. Do the 20 trade test. Pick one rule and stick to it for 20 trades. Control position size so losses don't cripple your capital. Keep a trading journal and note emotions. Use scale-out profit-taking. Adopt a short breathing routine before trades. If losing continuously, reduce position size and recheck rules. Once a month, analyze your 20 trade series. The key takeaway, the most important lesson is to train your mental state. Technique matters, but psychology makes the difference between success and failure. Accepting market uncertainty means learning to be comfortable with probabilities. This awareness helps you make decisions without emotional burden. Practical exercises. Here are some exercises you can start right away. Do 60 seconds of mindfulness before each trade. Focus on breathing and remind yourself it's just one sample. Focus on only one market for a week and apply the same rule. Read your journal at night and write 3 small objectives for the morning. Each week, list your top 3 successes and top 3 failures, then analyze the reasons. Controlling short-term impulsivity. Learn to control short-term impulses. Often our biggest mistakes happen in moments of euphoria or panic. Create behavioral barriers, like a 30-minute rule. If you just traded, don't trade again for at least 30 minutes. Such rules protect you from emotional overreaction. Final thoughts. No strategy guarantees certain success, but a strong mindset and consistent rules give you stability and control. Progress will come in small steps, but over time, it will compound into big results. Keep adding small improvements and prioritize discipline. Finally, here are a few clear steps to start today. Keep a small portion of your account for risk and safeguard the rest. Start the 20 trade test. Adopt a short daily routine. Maintain your trading journal. Conduct monthly reviews and keep learning. The real art of trading is to train your mind to remain steady in uncertainty. Once you accept uncertainty and predefine risk, your decisions become peaceful. That's the difference between traders who achieve consistent results and those who swing wildly. Your journey begins today. Make small rules, write them down, and follow them strictly for a week. Small steps bring big changes. If you stay patient and keep training your mind, long-term success is possible. Let's start this week and analyze our first 20 trade test next month. Take one more step forward on your path to success. These rules can change the way you trade forever. But tell me honestly, which one of these rules felt like, yes, this is the one that could change my life? Write your answer in the comments, because when you commit by sharing, your growth begins right there. And if you truly don't want to miss the next big lessons, then subscribe to the channel right now and hit the bell icon. Because in the upcoming videos, I'll be sharing even deeper insights and proven secrets that will not only reprogram your mind, but also reshape your thinking and take your trading performance to the next level.